you're a day trader or a swing trader, you'll never become rich unless you use this indicator. Good news, it's free. People think it's a great opportunity right now to buy the dip, like the Dow Jones 2-year 2-day, buy the dip at support. But if we look at the VVIX 2-year 2-day, you have two different zones. The support zone means lots of fear, time to buy. The resistance zone means lots of greed, time to sell. So with the VVIX being very low, that means it's a great time to short, not a time to buy the dip. I'll prove my point. You see all the circles here, meaning the market was at a support zone because of fear that was in the stock market. Time to buy. MAR 2-year 2-day, Marriott International Hotels, highlighting the dates with the orange circles. Here's the results: 48%, 38%, and 3 times around 22%. If that's not a good enough indicator when to buy for you, I don't know what is. Welcome to Stock Charts Trading, indicator alerts, trade setups, tips, and tricks. If you're a weekly subscriber to our real-time videos, thank you. If you're watching the delayed videos for educational purposes, I challenge you to review the trade setups to see if our trade advice is accurate. Once you've seen the results are on point, go to stockchartstrading.com, click on indicator alerts to get your weekly trade setup guide. Today's lesson, VIX, bullish versus bearish. The VIX has been given the name fear and greed indicator because it measures the volume of puts. More puts means fear because the market is selling off. Less puts means greed. When the put volume is low, that means greed. When the put volume is high, that means fear. You can see that I'm using the trend indicator. The top half is green and the bottom half is red, meaning every time the VIX comes underneath this center point, you should be looking to short the market, as it is right now. Every time it comes above the blue line, you should be looking for trades to take long. And since we're underneath the blue line right now, that means you should not be thinking at all about buying stocks. If you don't have the trend indicator, you could use the TPO profile, blue line's point of control. You can see it matches the trend indicator. Every time price comes above, look for long trades. Every time price comes below, look for shorting trades. Now, if you're looking for an advanced level thought process of trading the VIX, consider using something like the Heikin Ashi, fill red for up, fill green for down. Let me zoom in and show you. When the candlesticks come under the blue neutral line, you should be considering a bearish trade. You can follow the Heikin Ashi candlesticks down until they break out or change color, and at that point, you should be shorting the market as long as the Heikin Ashi candlesticks remain red or hit a resistance level or change color. At that point, you're in the buy zone. Having the green candlesticks means continue to buy underneath the neutral line or until you get a color change, breakout. This will greatly improve your trading process. Going with the trend will increase your profits. Another VIX chart to look at is actually the VIX. VIX 2-year 2-day. Top side of the trend indicator is green for long. You still have the blue line for the neutral point, and the bottom half of the trend indicator red for short. Now here's the rule you need to remember. If the VIX is high, it's time to buy. If the VIX is low, watch out below. Now how do you know if the VIX is high or low? Obviously the trend indicator in the red area. When the VIX is low, watch out below. Right now the VIX is in that red area showing watch out below. When the VIX is high, time to buy. So as these red candlesticks indicating the shorting of the market go up into the green area of the VIX, which is looking for a resistance level, which would be a support level on the charts, indicating a strong place to buy. I know it can be a little confusing because it's opposite, and that's why you should have the VIX or the VVIX chart separate, where every day you can look at it without messing the indicators up. Set your study to the VIX so it never changes. An indicator you might want to consider using is Stock Charts Trading implied volatility indicator. Why? Because our implied volatility indicator gives you the midpoint. It also highlights the high side of that midpoint, showing you when to take long positions, and the low side of that midpoint to show you when to short the market, kind of like it did right here. You should keep your trading strategy simple. 2 different studies for VIX or VVIX, one indicator set up for bearish and another indicator set up for bullish. The easier you make it on yourself, the better trades you'll be able to develop. The implied volatility is great for individual stocks, where the VIX is an indication for the broader market. Right now, the broader market VIX says short the market. Right now, the VVIX says short the market. So now that we understand we should be shorting the market, what's the plan? The trade setup's going to be very simple. We're going to look for trades in the top half, reddish part of your trend indicator. As price is rising up, fear should be dissipating, creating a downward channel on implied volatility. I wanted to prove this lesson works, so I did some day trades on Wednesday and Thursday, and here's the results. ADI 5-day 15-minute price channel going up as implied volatility was going down. Both were in the red sections. You can see it went much lower than my target. Costco price channel going up as implied volatility going lower. Both Both were in the red sections, but notice the trend indicator was also slanting upwards. I did not filter these trades out by the direction of the trend indicator. Only if it had a channel going upward with the implied volatility going downward, and both in the red boxes. You can see this sold off lower than my target. 5, I took this yesterday near the close. You see a little gap down this morning. Not quite to my target yet, but I have a whole nother week on this. And you can see as price sold off, the implied volatility started to rise. I can hold this until the implied volatility gets up into this green section, helping me be patient with my trades. Kind of like this one here on Home Depot. The implied volatility is high and we're at support. If you notice, I didn't get in at the resistance level. That was not my indication of when to get into the trade. I only had to have an up channel for price action and a down channel for implied volatility. And so this trade went against me for a little bit before selling off below my target. Lanier Homes entered into the trade here. We weren't all the way up against resistance. Implied volatility was going lower. Currently, implied volatility is at a high. Good time to buy, but in my case, close out the trade. You can see that we broke lower than my target. So I'm going to hold this one a little bit longer, hoping it will go back up to this target to get me out. Got a trade here, went a little bit higher, then started to fall off. You can see implied volatility started to raise right around this lower support level. QQQ, same thing, both in the red boxes. Totally blew past my target. Implied volatility is really high right now. Starbucks went totally sideways for a long time. We had opposite channels in the red zones. Price fell off right to the target as implied volatility shot up, which means my option value shot up. Here we are on SIG, 5-day, 15-minute. I was just testing this out even on earnings plays. And we could see the trend was totally going up, and this was a counter trend trade. As the implied volatility sold off, price action went higher. I entered into the trade, not even at the tippy top. My target was just come back down to support. It went down a little bit lower, fill in the gap, found some support, and started to go back up. Toll was perfect. Trend was going down. Price action was coming up. Implied volatility was going down. Both were in the red zones, right at my target today with high implied volatility. Great place to take profits. TSCO, we can see the trend indicator showing a sideways channel. I got into the trade a little early. I was in the red zone as the implied volatility was going lower. By the end of Thursday, I was about break even. Then this morning, it sold off below my target. As implied volatility went up, giving you more premium to your options. Any of you guys trade Tesla? Price went up into resistance. Implied volatility went lower. Took the trade, blew through my target. As you see, most of my targets were just back down to support. I wasn't looking for a very big move. Mostly the middle line. And you're seeing that a lot of the targets went down to the lower band. Implied volatility peaked above today. Great place to take profits. VMW, we took a look at this trade last week for a longer term approach. Came up into the upper side of the band as implied volatility came lower. Took the trade almost perfectly. Price sold off. Implied volatility rose. Even works on ETFs. Price action was going higher. It wasn't even up against this higher resistance or this resistance level. I just got in because the implied volatility was low. Both had just gone into the red boxes, and you can see the implied volatility sold off a lot more. But as price sold off hard, implied volatility started to rise. Last trade of our examples, XRT, another ETF. Price action was going higher as implied volatility was going lower. Both were in the red bands. I got in this trade on Tuesday. You see Wednesday morning, it went higher. I held the trade, and as price went down, implied volatility started to raise. Now, do you want to see the profits? And please consider there's different strategies that you could use. Because this implied volatility is so low, it would have been a great place to buy naked options. As the premium goes up, so do you make more money. So right now, the average of all of these trades is 137%, varying in percentage from under 100% to 200% and even higher. My purpose in reviewing the profits is to show you this trade strategy works. You can obviously tweak your option strategy to maximize your profits once you start to get familiar with this process. I just wanted to prove to you that this trade setup works. So now let's look at some real-time trade setups. TMUS 2-year 2-day. You can see we have a divergence. We're close to the trend indicator resistance line. Price action has just fallen underneath the volume profile. We have a nice wedge formation going upward in the red side of the trend indicator. Implied volatility is creating a support level underneath the midpoint, telling you it's a great time to short the market. We could take from our highs to our lows, duplicate those over, and again, to give us a target back to the midline, maybe a little bit more aggressive down to the bottom support level of $100. And the timing of this trade takes you all the way out to the beginning of October. You would obviously want the implied volatility come back up into these old highs, to consider taking profits. We talked about VMW on the lower time frame. On the higher time frame, we can see that we're up against resistance, trend indicator resistance, volume profile resistance, top side red showing us to short the market, whereas the implied volatility is at the bottom side, also confirming to short the market. You could draw a diagonal trend line to confirm, draw from your highs to lows, duplicate it over, highs to lows, and duplicate that over. As you can see, this little range right here is where I'm taking a target, back down to $100. If you're a little more aggressive and you want a bigger move, use the September or October options and hold it down to $90. WDC already selling off, lots of resistance. You'd easily anticipate price from this resistance would come down to the support level and maybe this diagonal support level, giving you a $40 target. Lots of support on the implied volatility. You would look for that implied volatility to rise up into this resistance level as price sells off lower. As it raises up into the green area, making you more premium, it'll come down to the green area of the trend indicator where you'd be looking for support targets. UTHR, price action channel going upward into lots of resistance, whereas the implied volatility is going downward right now in the red side of the box, which matches perfectly. Take your line tool, go from top to bottom of old momentum trades lower. In anticipation, history will repeat itself, giving you two price targets, which confirm with the midline of the volume profile and the trend indicator right at this midpoint, or you can hold it to late August, early September for this lower support level of around $161, which confirms this old support line of these candlesticks, giving you about a 30% move from here. We talked about tan last week, just in confirmation, still a good trade. Channel's a little bit more sideways than upward, but we can see the implied volatility channel making a wedge formation lower, bouncing off lots of support. As price sells off, implied volatility will go up, and you can use these old implied volatility highs as places of resistance to exit the trade. If you want more on that, watch next week's video. Another trade setup we can see from the past worked out right. Price action was going up into the red side of the trend channel. Implied volatility was going lower. Price sold off from there. Price action going up into the trend channel. Implied volatility selling off lower. Back down to support on the red side of the indicator, telling this is a great place to short the market. This is the first time I mentioned T, and you can see that price action went above and is still a little bit higher than where we first mentioned this trade setup. With swing trades, you have to give yourself enough time, and using these old moves to see the behavior of the trade setup is a perfect way for you to find out which option to take. As you can see, we still have plenty of time, at least a minimum of 45 to 60 days before getting out of this trade. Price action comes down, implied volatility will raise up, which is pretty common coming into earnings. As we can see here, and we can see here, this happens over and over again. Next trade, we can see implied volatility is in the red as price action's in the red under our volume profile with the resistance line coming down. Great place to take a trade. You can do a longer term trade and take this full move here and move it over for a target. What I mean by full move is you can see the A to B, B to C before it goes back down to C to D. A, B, C, D pattern versus the smaller moves of A to B, which come back down to the midpoint. See, this A to B came back down to the midpoint before going lower to the bottom side of the channel. Same as this one, making a longer B to C before selling off lower. If you like longer trades, instead of taking the little A to B trades, go ahead and use the whole A, B, C, D pattern in anticipation that you'll hold the trade for longer. This one will be all the way to New Year, January 2023, giving you a target level of around $55. Monster in the red side of the trend indicator with the implied volatility just coming below, touching the red side. Lots of long-term support indicating implied volatility is going to rise up into this old resistance as the price action sells off lower. If you like this week's lesson on implied volatility and how to use the VIX or the VVIX, and you want more information, then go to YouTube, and on our playlist we have implied volatility with lots of videos for you to learn from. Then when you're ready to start trading this strategy using the implied volatility, go to Stock Charts Trading and click on Indicator Alerts to receive your weekly trade setups. And as always, I wish you the best luck in trading.